Hey friends, good evening. Welcome back to my YouTube channel. This is Sachin Nachnani and welcome back to this Sunday special video on Nifty and Bank Nifty option chain analysis. So without wasting any time, let's get started and do the option chain analysis for Nifty for the expiry date of 24th of December, which is coming Thursday. So Nifty on Friday closed at 13,760 level, up by only 20 points, which is 0.14%. Nifty futures closed at 13,774 points, so that is a premium of only 14 points now. And look at this, Nifty has turned slightly call savvy. Yes, it is just about slightly call savvy for around 2.3 crore shares open interest on the put side. Nifty has 2.36 crores open interest on the call side, but on Thursday it was put savvy, and for a majority of November and even early December it has been puts heavy. Just one day of volatility on Friday has turned it to slightly calls heavy. On the call side, the highest open interest continues to be at the 14,000 strike, which has a premium of roughly 15 points and an open interest addition of over 9 lakh shares. However, the highest change in open interest on the call side was 10 lakh at the strike of 13,900. Please ignore all these other numbers above 14,100 because they are mostly used by option writers for creating hedges. On the put side, 13,700 has the highest open interest of over 23 lakh shares, and that also has the highest change in open interest of over 8.5 lakh shares. So roughly one third of the total open interest addition actually happened on Friday, and the premium is still 72 rupees. The next highest open interest is at 13,500 with an open interest of over 22 lakh shares, and which has the next highest open interest addition of over 5.8 lakh shares. Now when we have a look at the daily chart of Nifty, what we see is that the candle on Friday was a doji. Yes, it was a doji because the opening and the closing was almost exactly the same, just 4 points difference, and in fact the close was slightly less than open, so it's actually a red candle, although I doubt you can see it so very clearly in the chart, but it is a minor red candle. And there was just some bit of volatility. 772 was the high, 658 was the low. So just about 114-15 points of intraday move, which is less than 1%. But what is important to note is that the low on Friday was lower than the low on Thursday, which had not happened before except in on this day, but the candle closing was again strong, slightly strong as compared to the previous day. So for most of these sessions, if you look from here, Nifty has actually been having higher highs. Again, you have to ignore this candle because this was also a doji, but almost every day it has been closing at slightly higher level. So today, after many days, this candle managed to cross the low of the previous day's low, and it could not cross the high of previous day, which was a Thursday. Also, volumes have been slightly higher as compared to the last 3 days. Again, if you have been watching my earlier videos, I have been clearly telling you that volumes have not been significant, and I have mentioned all the reasons why it is so. So volumes, we have been ignoring it, but it is a bit of a concern that you are having so many doji candles, volumes are rising whenever there is a slight fall. You can see here, you can see here, whereas on the rally the volumes actually tend to be lower and they tend to decline, and this we have seen in the earlier instances also. You can see it automatically on the chart. So is Nifty facing some jitters? Is Nifty afraid of heights at 13,760 or 13,800 levels? We'll take some time to find out, but these are the initial observations. So based on option chain analysis and chart reading, what should be the strategy? Well, because of the jitteriness that we are witnessing, I will still suggest selling the 13,500 put option. And if you remember, in my last video also I suggested to sell this option, and the premium has come down by 10 rupees despite the volatility. So continue selling the 13,500 put option. I don't think any sensible trader should sell 13,700 put option. I know the underlying momentum is still very strong. Nifty continues to make new highs almost on a daily basis. Yet, if at all there is a fall, 150 to 200 points fall is absolutely nothing. So from 13,760 level, so 200 points, you will end up somewhere over here, around 600 to 650 levels. So I would suggest, if you want a fairly safe strategy and you want to sleep well at night, sell the 13,500 put option. You may get slightly lower premium tomorrow morning unless there is a gap down, but it still makes sense to sell this option and earn little less but have much lower risk as compared to selling any of these options between 13,600 to 13,750. On the call side, yes, you can sell the 14,000 call option. It's tempting to say 13,900, but avoid selling the 13,900 because we still don't have confirmation that Nifty is not going to make further new highs in the next few days. So sell only the 14,000 call option, around 14 rupees premium, maybe slightly less on Monday, tomorrow, and sell it in a ratio of 1:1. So for every call option that you sell, one call option that you sell one put option. In case needed, if you are very conservative, you can always go for buying hedges both on the put side as well as on the call side, depending on the capital that you have to deploy. Now let's move to Bank Nifty, which closed at 30,715 level on Friday, and it was down by 132 points. Yes, it was down by 132 points or 0.43%. So Bank Nifty again continues to underperform, and not just that, the futures premium has also come down to only 22 points. So look at this, Nifty futures has 14 points premium, whereas Bank Nifty, which is more than double in value, has a premium of just about 22 points. No surprises here for my regular viewers because Bank Nifty has been exhibiting some bit of volatility. It has been underperforming, and there is no surprise that Bank Nifty is call savvy with 72 lakh shares open interest on the call side with only 63 lakh shares on the put side. On the call side, absolutely no surprise again. The trend continues of highest open interest being at 31,000 strike with over 7.7 lakh shares open interest. The highest open interest addition has actually been at 31,500 of over 3.12 lakh shares, but just marginally below it at 3.08 lakh shares open interest addition has been at 31,000 strike. I know a lot of you may have a look at 30,500 strike and say, hey, this has the highest open interest addition, but this would be part of various strategies of possibly having a bull call spread option or maybe some other strategy which we don't know, and because it is in the money, I am definitely going to ignore it. So 31,000 and 31,500 are two strikes which are important on the call side. Similarly, on the put side, the highest open interest of over 7 lakh shares is at 30,500, and that has also seen the highest open interest addition of over 3.7 lakh shares. Do you remember the options which I had asked to sell in my earlier video? Well, if you had seen my video and you had sold those options, even at the end of Friday's session, you would have been profitable despite the fall and despite the volatility in Bank Nifty. Do check out my earlier video if you have still not seen that to understand what was the trade that I had taken and why. So the daily chart of Bank Nifty continues to have more red candles, and it is absolutely not able to touch the 31,000 mark since so many days. In fact, it has been stuck in a narrow range for at least last 7 sessions, and even before that it has been range bound but with a slightly upper bias. So look at this candle, look at this candle, absolutely identical candles on both the days. Look at the number of dojis here and look at the volume, slightly higher volumes on Bank Nifty when it is falling. Again, something very similar to Nifty which we have seen before also. So what is this showing us? Well, that Bank Nifty is not able to cross 31,000 and 30,000 should provide to be a good support. We don't know for how long Bank Nifty will be able to remain in this range, especially now that Nifty is also exhibiting some bit of fatigue, so to speak. And this is December, as we are approaching the last 2 weeks of December, last 10 days of December, volumes will keep coming down. it is possible that volatility can actually increase and can get magnified. We don't know for how long it remains in a range, but at least next week, in a day or two, I am expecting the volatility to rise and Bank Nifty to come out of this range. The probability of Bank Nifty crossing 31,000 looks slightly less as of now, and the probability of Bank Nifty coming towards 30,000 and possibly below it is slightly higher on a relative basis. So on the basis of this analysis and couple of observations, like the volatility has been rising, especially in the case of Bank Nifty. Bank Nifty is also underperforming Nifty. When Nifty is rising, Bank Nifty is falling, and Bank Nifty is turning weak. So in the wake of all this, what will be my action? What will be my trade plan? I will sell the 31,000 call option because I am becoming more and more convinced with every passing day that it is going to be extremely difficult for Bank Nifty to cross the 31,000 mark. Of course, the premium will come down tomorrow in case of any gap down or even in case of a flat opening. That's why now I'm very confidently going to sell the 31,000 call option unless Bank Nifty crosses 30,900 and remains above it for some time, then I will look at the price action and take a call accordingly. But till that time, I am confident of selling the 31,000 call option. I am not really looking to hedge this position on the call side, at least as of now. But on the put side, I am a little cautious. Well, I am still comfortable selling the 30,000 put option because Bank Nifty has still not broken that range. I would want to do it by buying a hedge, maybe 29,500 to 29,700, any of the put options on these strikes, and then keep the position hedged. I am not so worried of a gap up on Bank Nifty, at least in the current situation. So that is why if you are planning to sell put option, please go with a hedge. Whereas on the call option, at least I am not looking to get a hedge. If you want, you can buy a hedge against your sell position. You can still have a ratio of 1:1 on Bank Nifty, though with the confidence that I have, I am comfortable going with a 2:1 option also. That is selling 2 call options for every 1 put option that I sell. So this is my analysis for tomorrow, that's Monday. In case if you have any questions, do share them in the comment section. You have a profitable trading week ahead. All the best and have a good week. Thank you for watching this video.
You can reach out to me on Twitter, Insta, LinkedIn, and of course YouTube.